Hello and welcome to Chartmill. After a few weeks of summer vacation, we are back for more Chartmill videos. And first of all, I would like to thank all of you for the positive reactions and feedback, which are greatly appreciated. We will do our very best to keep posting videos on a regular basis so that you can continue to make the most out of this great stock screener. That being said, the VWAP indicator is a very popular indicator among intraday traders trading on the very short time frames. But maybe less known are the moving and anchored VWAP, which can be perfectly used by swing traders based on the daily charts. And in this video we take a look at the moving and the anchored VWAP indicator, of which both are available in Chartmill. There is already an article published on the site in which we go into the moving and anchored VWAP in some detail. In this video we take a closer look how to use them in the stock screener. Moreover, we will look at how you can incorporate the moving or anchored VWAP in your own trading strategy to spot low-risk swing trading setups. Let's start with the moving VWAP indicator. It is important to point out that this indicator should definitely not be confused with the regular VWAP, which is used on an intraday time frame. In contrast to the regular VWAP, which starts every day with new values, this is not the case with the moving VWAP, which calculates and displays an average over the selected multi-day period. So the moving VWAP is a trend indicator that shows many similarities with an ordinary moving average. However, in addition to the price at which the stock is traded, the associated volume is also taken into account. In the stock charts tab, you will notice the indicator or overlay field immediately if you hit the plus sign. If you are working in the stock screener, select the main chart tab and you will also recognize the plus sign where you can add indicators and/or overlays to the price chart. Select the overlay to add and you can choose between the anchored candle VWAP or the moving VWAP. For the moving VWAP, there is only one main parameter to define, which is the period over which the VWAP should be calculated. For example, a moving VWAP over a period of 50 days gives a trader information on the average price traded over the last 50 days adjusted by volume. And besides the period, you can also specify the color when you add the indicator. The moving VWAP is useful to determine the trend of the underlying asset. A 200-day moving VWAP can be used to define the long-term trend of the stock. If the price is above this VWAP channel, the trend is bullish. If the price is below, it is bearish. As mentioned in the article, there is one drawback to the moving VWAP. If the time span over which it is calculated is set too large, the number of transactions becomes so significant that the average flattens out, and as a result the moving VWAP value gets further and further away from the current price. For this very reason, it is much more useful to use the anchored VWAP if you want to incorporate it in your trading strategy. That type of VWAP can be attached to a user selected point. The main parameter of the anchored indicator is the number of candles you should go back to find the starting candle for the calculation. For ease of use, you can add the anchored indicator on the chart itself by just pointing at the candle where you want to anchor it to. First, you click on the inspect icon above the chart to enable candle details while you hover over the chart. Second, you define the candle where you want to anchor an indicator to. Right-click and select the anchored VWAP. Imagine, for example, that after a series of higher tops, you suddenly get a trend reversal with lower price levels. You can then plot a VWAP from the highest peak on the price chart. This will give you a first impression whether the shorters are mainly in winning or losing positions since that specific top. If the downtrend continues and you get a new lower top, just plot an additional VWAP from this new swing high, calculated from this level. In this way, the different VWAP intervals remain quite in tune with the current price development. The anchored VWAP can be used for a price retracement strategy at the first confirmation of a trend reversal on a price chart. In that context, it is important to be very strict when selecting setups to which this strategy can be applied. If, for example, there is an uptrend, we want to see at least one lower low and one lower high as proof that there may be a negative trend reversal. When the price then rises again to the anchored VWAP, we can consider a short setup. On this chart of the ticker LEN, we see that after a moderate uptrend, the price falls beneath the most recent higher low, forming a new lower low level. This is our first early indication that the current uptrend is weakening down. Price then retraces for a couple of days, but eventually there is a second sharp decline and price falls below the first lower low level. This is a confirmation that the long-term uptrend is over, because now we not only have a lower low, but also a new confirmed lower high. Moreover, price has broken the 200 daily moving average, which is another strong sign that the current trend is definitely reversing. This is the moment to add a first anchored VWAP level at the most recent lower high. As soon as the price rises to that anchored VWAP level, we can look for a short position. The price of the ticker LEN drops further. We see the formation of consecutive candles with long undertails and significantly increased volume, followed by 2 white candles. This is an indication that price will show at least a temporary recovery. As soon as the price reaches our anchored VWAP level, we will be ready for a short setup, trying to benefit from a second down move in the existing downtrend. In the last week of the month, a reversal pattern is visible, right on the VWAP level, which gives us a low-risk short setup. The first target is the current low of $26. The price initially drops to around $32, but then starts to rise again, causing our short position to stop out, break even, or perhaps with a small profit, depending on your position management. April the 8th, the high on which we took our short position is broken. This implies a possible reversal of the trend, and this creates a first confirmed higher low and higher high. This means that we are now plotting an anchored VWAP from this first higher low level, dating from April the 3rd, and we can now watch out for long setups if the price falls back to the VWAP level. However, keep in mind that the price is still below the 200 daily average. In the next few days, the price will indeed continue to fluctuate on the VWAP level in order to eventually continue to rise and form a new higher high, which will also give us a new higher low, dating from the 21st April. From that price level, we will draw a new anchored VWAP level, and again we see higher prices, followed by a price drop that is nicely countered by the anchored VWAP level. In this way, you can draw a new anchored VWAP every time a new higher top and corresponding higher bottom forms, and try to build additional positions in the direction of the existing trend. Of course, this is an ideal scenario. In most cases, the charts will not show such a nice flow, but that is not required at all. A typical feature of trend strategies is that the number of loss positions can be as high as 60 or even 70%. As long as you manage to keep the losses small, a few good trades like this one will suffice to make a positive difference. A couple of these trades in which you'll be able to stay in the trend long enough and in which you'll get multiple chances to expand your positions will result in big profits. Sound management is crucial in this context. Thanks for watching and see you next time.